Hello, good evening to all. This is Adil Fazal, market analyst at CFDs.com. Be sure to visit www.cfds.com for your trading needs and explore the products and services on offer. You can certainly qualify for the bonus for up to 25% cash for new deposits and new accounts, and even existing, I think, as well. So certainly visit the website and certainly explore that opportunity. If you are interested, send me an email, daytrader@inter-market-analysis.com, and I'll get that applied for you. Alternatively, you can visit the educational site where I post all my analysis, charts, up-to-date commentary and market forecasts at www.cfds.education, and certainly learn more there. Okay, this is a US market analysis for the weekend going into the February trading of 2016. So how do we decipher as to what the next move is? Okay, first of all, the markets are very sensitive to the obviously economic data as usual, Asian markets overnight, etc. The market is focused more on oil at present. The oil certainly seems to be the main catalyst, or one of the most sensitive catalysts, along with obviously China, the Shanghai Index. Obviously that's important as well, but it's the chart of oil. So let's bring up the chart of oil first. Let's look at commodities sector, and then we'll start to dissect the market everywhere else. Okay, so over the weekend I've posted some analysis on the chart of oil. I now expect the chart of oil to be into a resistance, especially given the fact that the latest news is that the Iranians certainly are not on board and will not join in on the oil supply cut, and therefore, for my interpretation, that's obviously bearish, given the fact that we are in this bearish channel and we're retesting that 50% resistance, and we are testing that upward channel resistance of lower lows and lower highs. We've had a stellar rally from the $27 level up to the 33 to 34. That's a $6 to $7 rally, and the dollar rally itself certainly seems to be running out of steam. Okay, now going to a 4-hour chart as opposed to a daily chart. Now you clearly see that we do have an inverted head and shoulders formation, but unless there's a concerted effort on the potential of cutting supply, and the Iranians are on board and the Saudis are on board, it's really futile, and that's why you're seeing a potential topping tail in that 200 MA holding on the 4-hour chart. Again, if this inverted head and shoulders neckline, or we do trade below this neckline, then therefore, i.e. we trade below $32 or $32.75 to be precise, then the inverted head and shoulders certainly fails, and we go back and test that 29 handle. The 60-minute chart, you can clearly see that we've got an intraday double top. We've broken out this rising potential trend line, and therefore we are expecting a move lower. We haven't put in higher highs after that potential double top, and therefore you are expecting lower prices. Okay, so very, very important to understand and grasp that fact. Okay, so it's all about oil, and that's basically what I'm trying to explain here. And now, not only are we going to track the price of oil, now let's bring up the price of copper as well. Let's have a look at copper. Copper certainly seems to be exhausted as well on the 60-minute chart. We're failing to really propel higher or make any new highs here. Going over to a 4-hour chart, again, certainly looks exhausted from my perspective. You can see that we have previous support equals resistance in this region here, and that level is certainly holding. Now going to a 60-minute chart of copper, I've already explained, you're looking at a potential double top intraday. The daily chart itself, I mean, we still have lower lows, lower highs, and that certainly seems to be the predominant theme, unless obviously something changes for the interim. Now we have had quite a stellar move. I mean, taking the pivot low here at just below $2, and we've come back up to 2.06. So we are into that fib 61%, and you are looking at previous support equals resistance, as you can see on the 4-hour chart, and therefore you are looking at potential resistance in the interim. Okay. Going into a smaller time frame, looking at a 10-minute chart, and you can certainly see some type of exhaustion, i.e. a failed move higher. Okay, now what's interesting is this high volume candle here was accompanied with a potential topping tail. So again, that's a telltale sign. Okay, now we looked at copper. Let's look at the price of gold as well. Whilst we're at it, you can see gold on the daily chart. You've had a failure at the 200 MA resistance, and you have rejected that. Okay. Now, given the economic data on Friday in terms of GDP, although it was missing expectations, the consumption side of the proponent, or a consumption side of the economy basically was certainly stronger. Okay. Now, if I just scroll back into my economic data, now look at me. Just read Mr. Fed Williams. U.S. economy. This is his statement. U.S. economy doing well. Think and weather storms from abroad. So that basically is an individual who certainly isn't hawkish and isn't talking about potential negative rates. Now the Japanese have done negative rates, so it's very hard for the US dollar now to certainly propel lower unless they adopt negative rates. So just based on monetary policy divergence, given the yen versus the USD JPY, if I bring up the chart of the USD JPY, if I bring up a daily chart, you can see the rip higher. I mean, that's one hell of a rip. Okay, that's a substantial rip higher. Now, it is into the 200 MA, so the initial, obviously, move is over from my perspective. You are looking at potential resistance now in the interim. Okay, in the especially the JPY, you can see the RSI is coming into oversold. The 200 MA is obviously into play. If we bring up a 4-hour chart, you can see there's a potential topping tail there as well. So therefore indicating exhaustion. Okay, so bear that in mind. Bring up a 60-minute chart, and again you had a topping tail. You've obviously held this resistance zone here at the 1.12, 1.5, and all eyes on that level. Now you are looking at a potential HNS formation here as well. If you just zoom in here, you should be able to see this left shoulder, obviously head. We've pulled lower, and then you're looking at a right shoulder, and obviously down you go. So given the fact that you are looking at the USD JPY into exhaustion, given the fact that the market certainly is trading in tandem with the USD JPY, because if you look at the USD JPY and you map that onto the S&P 500, you're looking at almost 100% correlation in general over the last few months, and ever since BOJ did QE basically. I mean, maybe not 100%, you do get divergences now and again, but the S&P more or less, I mean, if we look at the S&P 500 here, and you can see the move on the USD JPY is basically mirrored in the move on the S&P 500. Now, the S&P 500 does have the inverted head and shoulders formation. Okay, so we have the inverted head and shoulders formation on the S&P 500, and now we have a conundrum, okay? You have the conundrum with the JPY being crushed. Now, let me just bring up the chart of JPY, actually, one second. Although we did look at the USD JPY, that's the dollar side of the component. Now, let's have a look at the JPY alone. Okay, so this is the chart of the yen, okay? Now, you can see here that we've closed 1 and 2 gaps. So this gap lower itself has crushed, not 1, but 2 gaps. Now, generally speaking, you'd be lucky just to close 1 gap, but when you crush 2 gaps, that's a statement, okay? And that obviously caught a lot of individuals off guard, and obviously the commitment of the idiots at the Central Bank of Japan. Really, I mean, it's like a one-way street. They have no other option. I mean, it's like a gambler. I mean, he gambles 10 grand and he's down 20 grand, so he borrows money of somebody else and gambles another 20 grand to make that initial 20 grand back. So they certainly are stuck, and they've obviously basically rogered themselves basically, and they've got no other option now, given the fact that they've committed to this obviously scheme of tackling or fighting deflation, and they have to throw everything they have. So it's getting desperate, okay, and it really is diluted because it neutralizes their efforts, because you have the likes of China obviously trying to devalue their currency, the likes of the ECB attempting to devalue their currency, and it's the Americans who are having to suffer, okay. And this is why if you bring up the chart of this is another conundrum which I want to share with you as well, is you look at the chart of the US dollar. If I bring up the you can clearly see here on the weekly chart, we continue to make new highs. Now this is obviously based on monetary policy divergence. Now you have the ECB and Mr. Draghi committed to more QE in March. You have the BOJ that have basically dumbfounded and confounded everyone, and basically shaken a lot of traders off guard, or taken a lot of traders off guard. So I mean, not many people expected negative rates. They all expected additional potential for additional QE, and they certainly have exhausted that option. So obviously, negative rates is probably the only option or the last option they have left. So, do they have any more bullets to fire? I mean, it's like using your nitrous oxide when you're having a race. I mean, just imagine if you have a race and you have, say, 3 attempts at that nitrous oxide to propel your car forward, and you use them in quick succession, and obviously, when it comes to the last part or last third of the race, you have nothing left to fire. So, and you literally have no more nitrous oxide, so therefore you can't accelerate. And if you can't accelerate, i.e., you can't appreciate, or the stock market can't go higher, and thereby creates inflation, etc., etc., then there's only one way to go thereafter, and obviously that's down. So, it certainly is a conundrum. Now, obviously, oil prices aren't helping either. With the low oil prices, obviously that's basically exacerbating the concerns of deflation. Okay, and not only that, there's news now over the weekend that a lot of these oil companies are potentially bankrupt, and the bankruptcies are being hidden, just like the credit crunch. So again, it's there's a lot of variables at play, a hell of a lot of variables at play. Adding the fact that you got Chinese growth slowing down as well, lack of demand there, etc., and obviously that's adding to the deflationary phase as well. So they're not just one factor; there's a multiple array of factors. So this is all something that we need to take into consideration. So there's only so much I can discuss in this video, folks. Only so much I can discuss in this video. Okay, so the US dollar now, this is another conundrum. Okay, bear that in mind. You have the US dollar making new highs on the weekly chart. On the daily chart, you have a potential topping tail, double top. On the 4-hour chart, you can see that we have put in a potential double top. On the 60-minute chart, you can see we've put in a double top with a doji candle. You have an unfilled gap left behind. Now, the dollar is actually at potential double top. The yen itself has sold off quite substantially. We've put in a bullish engulfing candle on 60-minute, and we are looking to potentially, I mean, it's very hard for us to close that gap because that gap is based on a negative rates. That's a negative rates gap. I mean, that's not, unless, I mean, if that gap does close, and Mr. Abe and Mr. Kuroda are absolutely rogered, okay, because their whole concept of knocking the yen down has failed to a large extent. Okay, so again, looking at a potential consolidation, move higher, then obviously looking to move lower to close that gap to below, and that will obviously propel the stock markets higher. Now, again, like I said, we have this conundrum. We have the conundrum of the weaker yen propelling the stock market higher, and then we have the conundrum of the oil prices propelling the market higher. So if the oil prices continue to go higher and the yen continues to go lower, then obviously that's a win-win situation for the equity market, i.e. the US markets, and you are going to see the market appreciate. Okay, adding the fact that ECB is expecting more QE, etc., etc., and that's going to help the markets appreciate. But given the fact that now the yen is potentially into the yen itself on the yen chart certainly is showing a potential bullish pattern. Okay, and given the fact that the US dollar is obviously looking toppish and looking into resistance, then well, logic would state that you are, and given the fact that oil prices are certainly into resistance, and there's been no Chinese rate cut over the weekend, which there were rumors, and that's what was causing the short squeeze to a large extent. Obviously, yen was as well. Then it certainly seems that the dollar is certainly headed lower. Okay, and that will obviously send the equity market lower as well, because USD JPY is going to move lower. The yen is going to move higher. So the market not only is focused on oil, but also on yen. So if you are trading the US markets now, given the negative rates, the focus will be on the yen. The markets will be sensitive to the yen. Yes, you will be sensitive to China as well, but also oil as well. Oil is into resistance, yen is into support. Okay, and equity markets certainly look toppish from here, given the rally that we've seen on Friday. So a number of factors. Again, Asian markets as well, Chinese. Now let's bring the Chinese market into the equation as well. If I bring up the chart of China, okay, and bring up a weekly chart of the Chinese index, you can see that we are near the 200 MA on the weekly. So again, that's something to take into consideration. Daily chart is putting in a bullish engulfing candle, but all we've really done is close the gap. So it's not exactly overtly bullish. Yes, we have an unfilled gap to close above. Even with the drop in the yen, we still failed to really propel higher. So and given the fact that previous support equals resistance, we haven't even got past that yet. So again, we shall see how the markets trade. If we see a concerted effort above this previous support equals resistance zone, the market starts a short squeeze higher, then yes, we are bullish and we are looking for higher prices for my interpretation. Okay, and then we shall see. And obviously the price of oil will dictate, and news flow, etc. as well. So in terms of news flow overnight, going into obviously Monday's session, you have Chinese non-manufacturing PMI, you have MBS PMI, Caixin manufacturing PMI, Nikkei PMI. So a raft of economic data, and very sensitive as well. Okay, you have your RBI commodity index as well. You have European European data on tap, European PMI. You have UK PMI, consumer credit mortgage approvals, US data. You have the PCE expenditure, so the personal consumption expenditure. So again, we'll verify if that Friday's data was actually strong personal spending, personal income. So again, Monday's data from the US, Stanley and Fisher, them two are talking as well. again, it's going to be an important day on Monday. So Monday will be a test of Friday's rally. Okay, so again, hopefully I've given you a backdrop on just fundamentals there. I mean, that's almost 15 minutes just on fundamentals. Okay, and you can see how why it's so crucial. Number one, China. Number two, yen, due to the negative, obviously, correlation. Or the negative rate, sorry, that was introduced, and the positive correlation with the USD JPY. Okay, although it is now into resistance, and oil is into resistance as well. So China, number one. Two, oil. Okay, and three, now the third factor obviously is the yen. Okay, so watch out for those three. If you can work out which, if you can work out in tandem as to which way they are, all three of those three variables are going, you'll be very successful at trading the S&P 500 this week. Okay, now let's bring up the technical chart patterns. Now that's enough of the fundamentals. Let's look at the technicals only, and let's look at where the price action wants to go. Okay, so symmetrical wedge has broken, and we've broken higher. Okay, so certainly an impressive move there from a technical perspective. Technical perspective states that you want to revisit the 1950 level, which is previous support, well, previous resistance zone, and then you are looking to potentially close a gap at 1990 to be precise. Okay, previous support equals resistance at 1995. So again, that will be the zone to watch if this market makes a concerted effort higher. Again, this rally was on good volume, so certainly conviction in this rally. Okay, again led by negative rates and obviously oil prices appreciating. The 60-minute chart in the inverted head and shoulders formation is asking for 2003 on the S&P 500, so that again has to be respected. From my perspective, you are looking at resistance in this 1935 to 1948 level. If that level gets broken, the next level is looking at 1963, which is a 200 MA. Then previous support equals resistance at the 1995 level. Bear in mind, again, you do have an unfilled gap here at the 2017 level, and then you have another unfilled gap above at 2044. Whether the market can lift to those, certainly appreciate to those lofty heights, is yet to be seen. Everything and anything is possible in this market, so trade and adjust accordingly. But from a technical perspective, very, very bullish. From a fundamental perspective, at the moment, at this current juncture, it's calling for a pullback. Again, the market is always correct. My analysis is obviously is always subjective to my understanding and my interpretation of fundamentals and obviously technicals and intermarket analysis as well. So always do your own analysis and obviously confirm. But from a technical point of view, if you're just a technical trader, I can't fault you for being long. If I was a technical trader alone only, I'd be long as well. Okay, the momentum certainly is long because you have a higher low. Okay, if you're a trader on fundamentals, then you are concerned at this juncture. Okay, and if you're trading on intermarket analysis, you'll be even more concerned. Okay, that's my understanding. Okay, so the S&P 500, let's cross-reference that now with the Russell 2000. Okay, Russell 2000, very, very important. Let's just bring up a chart of Russell, the IWM. Here we go. Okay, so the Russell itself on the weekly chart, still an inside bar, still holding previous support equals resistance, so therefore bearish. Daily chart itself, yes, okay, we've broken out, very impressive here. Realistically, it's just it could just be a lower high. Okay, that's basically what we're interpreting it as. 60-minute chart, you have horizontal resistance, and that's the zone that we're in. Yes, we do have an inverted head and shoulders formation, and you have a target of 107. So certainly a propel higher. You have resistance at 105 or 104, 105. Okay, so that's the two zones that you look at. Okay, so again, we can cross-verify that with the Russell 3000. From my understanding, I always cross-verify. Daily chart itself, very similar to the Russell 2000. You have closed that gap very impressively. You are into horizontal resistance. Okay, the next zone, if that fails, is the 200 MA, and obviously horizontal resistance at 114 and potential 115 as well. Now, again, you can cross-verify that with the Wilshire 5000. Looking at a weekly chart, again, yes, very impressive and a thrust higher, but you are into that potential previous support equals resistance zone. The daily chart of the Wilshires, again, very, very impressive thrust higher, and you are coming into potential resistance here. Okay, now going into a 60-minute chart, inverted head and shoulders formation wants to scream higher. The resistance zones to watch is this level here and this level here. So certainly very close and approaching key resistance zones on the Wilshire 5000. So bear that in mind. Now let's bring up the chart. The Nasdaq, looking at the weekly chart first of all, still an inside bar. So given the fact that this weekly candle on the 11th of Jan weekly candle basically is certainly bearish, and the market hasn't taken that out. If we take out the 4300 level, then the bulls certainly will be screaming higher. Well, certainly could be back in motion and back in trend. Now we do have an inverted head and shoulders pattern on the daily chart of the Nasdaq. So again, that a lot of respect needs to be given there. You have two good follow through on volume days, so certainly take that into consideration as well with regards to your trade. Obviously, we need fundamentals to back our short trade, and that's something that I'm going to be focusing on. We are into gap fill resistance on the Nasdaq, sorry, at 4270 region. So therefore, looking for a potential pullback before we really move higher. Okay, and again, this has an inverted head and shoulders on the 60-minute chart. The 10-minute chart of the S&P 500, higher highs, higher lows. We are in this bearish, bullish channel, should I say? And it certainly is looking very exhausted, and we shall see exactly how the markets open and how they react. Okay. Now let's cross-verify that chart with the Nasdaq or the biotechs. Biotechs certainly seem to be building a base on the 60-minute chart. On the daily chart, the biotechs certainly is holding that gap fill support level, so certainly does call for a potential solid bounce from here, and a very, very strong argument to move higher on the biotechs. Now the 60-minute chart of the biotechs, you can see we built a base, no lower lows, looking for a potential higher low or a lower high. So that's something that we're going to be focusing on. Okay, you do have horizontal resistance in this zone here, and again, that's something that we're going to respect for now. Previous support equals resistance in this zone here, so you're looking at the 2810 region as potential resistance. Now again, semiconductors, let's just cross verify that with the semiconductors. Semiconductors certainly have closed a gap and pushed higher, so very, very impressive. Although you do have a level of resistance here before you get to the next level of resistance, which is gap fill above. The 60-minute chart itself, again, impressive. And again, you can clearly see the very similar pattern that basically shows up everywhere at the moment is the inverted head and shoulders. I mean, this is your left shoulder, then obviously you've got your head, and then you're looking for your right shoulder, and off you go to the races. So you have that unfilled gap above. So again, it all depends on how Asia reacts and how Asia trades, okay, and whether or not that negative rates in Japan is certainly going to trigger the new round of risk on. Okay, that's something that's going to be very, very important to understand. Okay, now let's look at the Dow Jones. Let's bring up the Dow Jones Industrial Index. Looking at a daily chart, you can see that we are now coming onto resistance at the 16,000 level. Weekly chart. Again, certainly an impressive thrust higher. On the 60-minute chart, you have the inverted head and shoulders, certainly an argument to go higher, but you are into resistance in the interim, okay? You certainly are finding resistance in the interim. Dow Transports, again, inverted head and shoulders, certainly looking bullish from my perspective. Although, having said that, you are looking to test the upper channel resistance of this bearish channel overall. Emerging markets, again, you are testing previous support equals resistance, and that certainly is a concern. Now, with regards to the US, whether or not emerging markets can be lifted if China is lifted. So again, all eyes on China and how Chinese markets trade overnight. Now, if we do start to get to see a move higher, given the fact that oil prices are starting to reverse as well, we do need a concerted rally in the Aussie and the Kiwi to really keep us interested and excited. And if you can take out that previous resistance or previous support equals resistance, then with conviction, then you are looking at a nice rally in global equities. So all eyes on the emerging markets index as well. The Nikkei on the daily chart, you've broken out this dead downtrend. Now again, it will be supported given the BOJ's negative interest rates. So certainly the yen will be under pressure to a large extent, and the Nikkei will certainly be favored. So again, that's something to consider. Now let's bring up a chart of the financials, so we can always cross-verify. Daily chart of financials certainly is putting in a nice reversal here. Good bullish candle, broken out this downward channel. So again, adds weight to the potential rally in the markets. You are looking at one as well. Okay, so certainly a lot of respect needs to be given there. 60-minute chart of the financials, you potentially are coming into resistance in this zone here, and that will certainly act as resistance in the interim before the next potential move on the market. So looking for gap fill. Okay, now let's have a look at the energy sector. Energy sector enjoyed a stellar rally on Friday, and you are now coming into potential gap fill resistance, given the fact that oil, like I said, is into resistance, and therefore you're looking at the markets being into resistance as well. So can you see the conundrum? You have oil into resistance, so again, therefore weak for the markets. You have Japan negative rates, and certainly a potential for a rally to continue. Okay, and if China can stabilize and certainly start to move higher, then you are looking at an impressive rally in the equity market to continue. Okay, so again, all eyes on oil and how that trades and how that reacts. Okay. Right, that's a summation really of US markets. I hope that's been an insight. Again, USD JPY, the chart will need to be focused on and watched like a hawk. Okay, emerging markets need to be watched. Financials, as I explained, you need to observe them and they will dictate and tell you what the next move is. Now, one more factor that I haven't discussed is the 10-year note, the US bond 10-year note. Now, the 10-year note is confusing because we are potentially breaking out higher on the daily chart, and that generally means that you are looking for a weaker dollar. If you're looking for a weaker dollar, then that generally means that you're looking for USD JPY to potentially fall, and that will send the yen higher and therefore send the stock markets lower. So, again, it's a very confusing factor here. And given the fact that if you're expecting the bonds to continue to rally higher, therefore you're looking for the yields to fall, therefore you're looking for the dollar to fall, and therefore you're looking for the USD JPY to fall, and the stock market obviously will fall as well. If the bond yields start to fall, that's when you really have well, not bond yield, but if the US bond starts to fall, the price of the bond, then the yields start to spike, okay, and that will be another conundrum. So, and that obviously is negative. So you have a rally in the bonds, okay, means a weaker dollar, which means higher oil prices. Higher oil prices is good for the equity market to a large extent, the way in which this market is being so sensitive towards it. But then, if you're a weaker dollar, that means USD JPY is going lower, yet yen will start to strengthen, and that will cause a sell-off in the dollar. So a sell-off in the equity market. And if Chinese markets, they come in and they present a scenario, i.e. they're weaker overnight, that will automatically send the yen higher, okay? And that will obviously cause USD JPY to fall, which will cause the dollar to fall, which will cause the equity market to fall. So can you see the scenarios and the potential outcomes here? Okay, it is a real conundrum, especially given the fact that the USD JPY, the 10-year note, is making new high. Okay, and that generally means that the dollar is going to be weaker. The dollar is going to be weaker, then we all know what's going to happen next, because USD JPY chart will not look as healthy before. It's been a weaker yen rather than a stronger dollar. Okay, so again, that's something that we need to discuss and contemplate. So, just food for thought, okay? Food for thought going into Monday's trading. Again, Asian markets dictate, oil will dictate, and the yen will dictate too. Okay, trade safe. Wish you the best of luck for this trading week. Be sure to visit cfds.com and open up a trading account. Goodbye.